Hey guys, how's everybody doing? Appreciate you all for being here. I think I have a couple of people waiting, or at least one person waiting. Anyway, okay, this is going to be Max's earnings extravaganza. We're going to look at that earnings spreadsheet I built and try to find some winning trades. Let's look at the market first. Let's see. S&P down about 0.5%. Q's down 0.25%. Bitcoin's up 1%. Good to see. 10-year. Let's go to SPY. What the heck? So I guess the gap didn't hold. I've been busy working all morning. Well, no, the gap didn't hold. So let's turn that red. Evidently, that was a bull trap there. It wasn't a. Anyway, that's fine. They're back in this other gap area, which was red because it was a bearish gap. But then I probably just ought to take this one out. Anyway, all right. Well, who knows? I mean, maybe they're checking a previous POC. There's a POC right here at 627. Another one at 624. Hopefully they'll stop at the one at 627 this time and then maybe mount a new rally from there. We'll see. I don't know. I've been busy. There's probably tariff news hit the market or something. All right, we can do the earnings stuff now. I'm just kind of waiting for people to get here. Oh yeah, and this morning I forgot to show the top 20 list. So, and I made a new one today, but it's PLTW right now. NVDY number 2, AMDY number 3, PALTY number 4, COIW, GPTY, OARC, YETH. The Ether's really on fire. QDTY. Then you can see the rest of them. All Maxi made it onto the list. Somebody must have dropped off. Or maybe Maxi's just moving up, but it only pays a 28% yield, but that's pretty good with the 19% NAV return. And the reason it's not higher is because it's pretty volatile. It has better raw numbers than, for instance, lots of them, but it has better raw numbers than Baggy, for instance. But it's because of the volatility adjustment. It's not ahead of Baggy. Baggy's pretty darn stable, and especially compared to Maxi. Anyway, okay. So that's that. The get paid every day list. Who cares? I haven't made a new one. I need to work on the logic of this. My get paid every day list is blocks Monday, NVDW Tuesday, COII, CO2, whatever you want to call it. Wednesday, YETH Thursday, or you could use YBTC. That's dealer's choice. And then we have QDTY would be my choice, but I don't know, actually, maybe GPTY. I don't have QDTY, or do I? No, I don't have QDTY. I have YSPY and triple QI. But anyway, but I have a lot of GPTY, so that's kind of disingenuous. I guess my choice would have to be GPTY because that's the one, it makes up like 25% of my portfolio. It's a good one. GPTY and Alti are the two biggest positions I have. Okay. So that's that. Let's see if anyone's here yet. Marcus is here. We got 5 other people. Marcus plus 5. Okay, great. Let's take a look at these earnings trades and try to figure out what in the heck is going on. So I've already done this. I've sorted it by friction, and you want friction to be as low as possible. That's how much money it takes to get in and out of the trade, how much you lose on the bid-ask spread, so to speak. And the lowest friction one is CELH. It's $50, $7 expected move. It may be a little less now because time's passed, but it was 7 when I checked, making it a 14% expected move. Implied volatility is 168%. This one's probably a good one, and the options are good. So let's just start with that one. Now, if there's any that you guys want to see, put it in the comments. But in the absence of that, I'm just going to do whatever I want to do. And there's no call skew. There's negative call skew. So that, that means this sets up for a risk reversal. And I'm in love with risk reversals. So let's just see, but let's go to option strat and check it out for ourselves. I need to start doing some other kinds of trades. It's not, I mean, there's lots of good trades besides risk reversals. I just think they're really good for earnings trading, especially when you don't have call skew. So CELH. So we're going to sell a 47.5, buy a 45. Actually, we're going to sell one. All right, what in the heck is going on here? Oh, well, switch to call. Okay, there's a risk reversal. Let's set the call on the strike we want, and I want 20 deltas because I don't want it to be too useless. We could go buy this one, the 60 strike call. It's 92% of the time it's not going to help us. I'd rather something help us 20% of the time. Hang on, though. This is weird. Okay, yeah, so 36, 18. There we have it, the 52 strikes. So now we have to set our put spread as far away as we can, but where we can still pay for the call. And this is, I mean, this is fairly liquid, but it's getting late in the week too. So let's just try it like this. Well, we may need to go out a week. Let's do this. It's just there's not enough time left in this week. I mean, or there's not enough premium. I usually don't do this, but we kind of have to if we want this trade to work out. All right. Well, and if it does beat earnings and trends up into next week, I mean, this could be a trade. It's only $350 risk, which isn't too bad. Gives you a 3.8% buffer, and it gives you an immediate return of $50 on 350. So is that 1/7, whatever 1/7 equals. So let's maybe try to build a little bit more buffer in. Let's see if we can slide this out here a little bit further. All right. Now, that's not quite enough immediate return. I like 10%. There we go. Well, there's 10%, but and you have a 5% buffer. Of course, it has to last through next week also. Anyway, I'll put this in there in case anyone's interested in it. That's a bullish shot at earnings. If we're bearish, we could do a broken wing butterfly or something. It's up to you. Just let me know. You guys know more about these individual stocks than I do. It already had earnings this morning. Okay, great. Great. No wonder. And that would explain it, Sean. Thank you so much. Gosh darn it. Okay. How did I miss that? Anyway, that's fine. So look at these other ones here. My bad. Well, that would totally explain why that didn't set up and I was having to go out an extra week because the volatility's already got crushed. Okay, well, I was using this right here and gosh darn it. Of course it did. It's right there. I see that. So did, okay. It just made it. But anyway, we do have, anyway, I'm sorry. My bad. Thank you so much. Thank you so much. But Block hasn't had earnings, right? So is Block, right? Where's Block? Yeah. Okay. Block, Trade Desk. Okay. I'm my bad. It just made it. I cut it off one. Anyway, perfect. Okay. So Block is going to be our candidate. Block has the same stats. It's super liquid and it's super liquid and and doesn't have call skew. So we'll look for something in Block. All right. So I'm just going to take this. I didn't even share it and that's good. So I'm just going to go back to editor. Just switch this to Block, otherwise known as XYZ. All right. And we should be able to do a 1 week. I've never had to go out 2 weeks like that to make it work, but that totally, the option market knows everything. You can't fool the option market. They know all. Option market is all knowing. Okay, well, let's get one on in this. Sorry about that, but luckily we aren't running out of time like we were yesterday, but I appreciate the tip, Sean. All right, so this looks decent. Let's try this. Let's try this. And the negative call skew, let's make sure that still exists. This is a 246 and this is a 231. So it's actually a little bit cheaper to go out than it is. So we're getting this one, we're selling this, so we're bringing that in, and then we're buying this. So it sets up just math wise. Doesn't mean it's going to, we still need the stock to cooperate. We still need block to blowout earnings. I'd be happy to do a bearish or a neutral trade on this also. A neutral trade could be a nice trade also. We can even calendarize something and do some kind of diagonal or something. Okay, but anyway, let me just try to get this one set up since I started it. All right, so that's the trade right there. $800 risk, 10% yield, combined with the 5.5% buffer. Just for 1 week, we're going to save this, and then I will share that with you guys. Maybe that will help someone out. Maybe it won't. I hope it does. I hope somebody did the Arista Networks trade. That was a good one. All right. Yeah. Good information, Sean. Hey, Mark, how are you doing? Bon, I haven't seen you around here before, but I may just not have noticed. Anyway, I appreciate you being here. And of course, Marcus. Of course, there's Marcus. Okay. So let's go back to let's see what else we can get out of this spreadsheet. So arranged by friction. So our other non-volatile ones would be CleanSpark, Tempest AI. But I'm trying to think here. I want to do something on the SoundHound because there was a ton of call skew. I want to do some kind of broken wing butterfly. Now, we have to keep in mind it's not super liquid. We're going to lose probably half a point just getting in and out. And that right there is 48 bips. That's just getting in and just getting into a strangle. And really, we aren't going to pay that. We're going to split the difference of the bid and ask most likely, but we might have to make 2 trades. So even though this is the total amount of the spread for 1 trade, we'd expect to actually end up costing ourselves about half of that in and half of that out. So I think the 48 is a good metric. So we need to realize we're going to lose probably half a point just messing with the options on here. So in other words, blocks or XYZ or Celsius, or, if we would have known that, or CleanSpark could probably be better play for our money. Maybe we'll do something in CleanSpark, but let's look here. But I want to do a call skew play. So let's go to Tasty Trade, and let's go over here to Pinterest, and let's look. So the at the money's 275, and then so the call skew went away, or maybe hang on here. Oh, no, SoundHound. Gosh darn it. Of course, the call skew went away because it never had call skew. It's SoundHound. All right. Now, this one's kind of cheap, though, is the only drawback on it. Anyway, whatever, though. At the money's 362 or 382, depending on which strike you sell, 10.5 or 11, you're going to earn 364 to 375. But if we wanted to do a risk reversal, we'd be paying to get the 20 delta, we'd be paying 422. So that doesn't set up well for a risk reversal. There's a huge premium for out of the money calls. And maybe that means that's exactly where it's going. I mean, the market makers always know, and they're worried about those, and it doesn't look that illiquid. I just measure it right here. I go to the expected move. That's 2 cents right there. And the expected move here is 1 cent. So the liquidity's come in. It's not as bad as it was when I measured it last time. So this is actually a good candidate. So I want to target this. I want to target the call that I would normally buy, which would be the 13 strike somehow. So here's the way we're going to do that. We're going to go over here. SoundHound AI, and we're going to do a call butterfly. We could also do a call diagonal. but I don't have, but I would need to make a better spreadsheet to be able to do that, because we'd have to look at the IV in the next week and see if that sets up. But anyway, so did I say I wanted to sell the 13? Yeah, it doesn't seem like all that far anymore, but, and then from there, I just got to decide, from there, I got to decide how much risk and reward I want. So, but yeah, I'm targeting that 13. And I'm selling it twice. So I'm getting 420, I'm getting 844 IV points in. That's wonderful. Now I'm spending 366 plus 451. Somebody add that up for real quick, but I think it's a little bit less. And I don't want to do it. I don't want to do a regular butterfly, although you could. But I don't want to lose when they blow out earnings. I never want to lose when they blow. I'd never want to get beat by something that does well. Especially not a freaking AI, no way. I at least want to have a win, but you could even make it where you have a bigger win if you squeeze it up here a little bit closer together. Yeah, something like that. $45 risk. And there's no theta equation here. You aren't going to make money if the stock goes nowhere. You're playing for a move when you're doing this, but we're trying to play into the skew. So if they miss earnings or they don't do anything, you're going to lose $45 per contract. But what we're hoping for is, by tomorrow at noon, if we could just get these guys to be at least $11.40 to whatever, and we get our money back. And then, of course, if they go to the strike, if it goes to 13, it can make more than that, depending on when you get rid of it or whatever. But this way we're trying to monetize the skew. So I will put that one out there. Yeah, liquidity didn't turn out to be a problem on that one, and that's why we're going to check in Tasty Trade. All right, hang on. All right, so anything you guys want to see? Let's look back here to the earnings extravaganza. Let's pick another just liquid tech stock. Now this Clean Spark has a little bit of skew, positive skew. It has 2%, not really that much, but I just don't like Win because it's not a tech company. Let's do maybe Rocket Lab. It has negative call skew, and the calls aren't that expensive. The only knock on it was it had a little bit of friction. When I measured the bid-ask spread last night or this morning, it was 18 cents. So let's go look at Rocket Lab now. I guess let's look at it in Tasty. All right. Well, let's look at the liquidity. 69 that's 4 cents, and over here is what's that? 5 cents. So it's 9 cents. And this morning it was It was 18 cents. Anyway, so it's got more. It's fine. So liquidity's fine. Everything's good. Let's look at something on here. Since we did the other two bullish, do you want me to do? Let's do a neutral one, just because I hate to keep showing risk reversals all the time. And you guys, I've showed it a million times. If you guys like that trade, they're easy to put on. I've explained it a million times. But if you want me to do one specifically and choose the strikes, put it in the comments. But I'm going to look at, let's do something on Rocket Lab that's neutral. Neutral. So let's do, oh, here it is. Okay, so, that's just a starting formation for something neutral. I mean, you could also do condors, but it's just an extra leg, and I'm just not big into those. But so all we have to decide now from here is where do we want to put our risk, or do we not mind having risk on both sides? I guess a truly neutral trade, you could just do this. You could even spread these out further. I mean, there's any number of things you could do. But you wanted equal risk on both sides, something like that. That gives you a 9.7% buffer both ways. But anyway, so what I'm going to suggest, though, is no risk to the upside. It's because I hate risk to the upside. But if we're in a bearish market or whatever, you do the same trade with no risk to the downside. I'm going to scoot this in. I think that's out a little too far. And then I'm also going to make that. All right, so here we have it. So it's the same thing as the risk reversal. It's about the same safety. I mean, usually I get 5% or so buffer on the risk reversal before I lose money. And the risk reversals also doesn't have unlimited downside, and neither does this. You know, the only thing you really don't want is you don't want a good earnings report. Then you'd be mad you didn't do the risk reversal. I guess you could do both of them at the same time. You know, it's anyway, but basically here we want an earnings report with up 5%, down 5%, whatever. That's kind of what we're looking for, and we'll get our money back. If it blows out earnings, well, whatever, we'll still, you know, at least it doesn't beat us. Now we could switch them to puts, because that's a debit trade when you do a call broken wing butterfly or a call butterfly. It's not, the broken wing doesn't have anything to do with it. But we can switch it to puts and and it's the same math, but we get $45 up front. You have money to take her right to dinner. Now, granted, you can't take her on $45, but you could do this 10 times. And let's see here. Let's link these legs. You know, it's $1,000. Lots of those risk reversals, you're risking about $1,000, and it's about the same math. You know, drops more than 5 or 6 points, you're probably going to lose. It, or you're going to lose something. And if it drops 10%, you're probably going to lose everything you have in the trade, the max loss. But if they blow out earnings, you just get to keep your credit. You're playing for that. You're playing for getting to keep your take your wife to dinner money. I mean, this makes probably as much sense as those risk reversals. So anyway, let's just do that one. So we're going to call this one neutral to bullish. Now, if you guys know which way these are going to go in advance, of course, you could do the option strategy that monetizes it. I don't know which way it's going to go in advance. So I try to just take that out of the equation. But if you knew this was going to be bad, for instance, but you weren't sure it was going to be bad, you could do something like this. You're not sure it's going to be bad, but you could do something like this. And it's basically the same trade, just the reverse. You know, what you're really hoping for is a non-move. You're hoping for a non-move, but if they screw up earnings, you make $350. But if you wanted to do it that way, then you probably want to switch back to calls so you get a credit, take your wife to dinner. There you have it, $125. Now, you can't buy her much of a dinner there. You go to Chili's, you know, Applebee's, something like that. But anyway, that might be fun. So I'll put this up there too, just for fun. So this is neutral to bearish. And I'm going to save that as a new trade and then give that to you guys as well. All right, so what else do you guys want to see? Is there something you want to see? Can you tell me which way some of these are going to go? I mean, is there some way, how do you know? You can look at companies that like Apple, that have a history of beating earnings. And there's services that show you 9 out of the last time they beat earnings. But that doesn't always equate to the stock blowing up, because maybe other people know they beat earnings too, or you know, anyway. But I wish I could find a way to determine the direction on these. And if I was bearish, I would just do the neutral to bearish broken wing butterfly. And then if I was bullish, I would either do a risk reversal or an out of the money call spread to take it if there was call skew. Or if I was kind of neutral to bullish, I would do just a risk reversal. Maybe let's calendarize something. Let's look here just to kind of get the trifecta going here. This is the earnings extravaganza. We have to be extravagant, right? So, I mean, I have the implied volatility premium. That's this week's to next week's premium. The highest one is Pinterest. So let's just, I mean, and also CART, but CART wasn't super liquid. What even is CART? Let's look at Pinterest and let's do some kind of Let's do some kind of something in there, maybe a ratio diagonal or something. So the skew is not a problem. Supposed to be a 4-point expected move. So well, let's just do this. Pinterest. All right, so let's build us a calendar call spread. So same theory, let's go out and sell a call at the expected move. So we could look on Tasty Trade too to get an update on the expected move. So I did these this morning and this thing's moving. All right, so 43, 42 and a half, 43, something like that, otherwise known as the 23 delta option. So let's just go sell us the 23 delta. There's the 24, a 43, there's a 21. Anyway, we'll find something to sell. I like to be bullish, so we could do that, something like that. But I think it's kind of a waste of money to do that. You could do that other ways more efficiently, but because also that it's probably, I mean, you know, that doesn't go way past the expected move very often. I just don't want to lose money in a double expected move trade. So from here, I use it to set the risk and reward parameters that I feel comfortable with. So, I mean, $54, I mean, that's nothing, right? So you want to set yourself a consolation prize where if you do get a 3 standard deviation move, you still make something. You still make $63. That's pretty, that's 150%. That's really good. Now, the problem with these are they don't make a lot of money. I mean, because you're waiting for lots of times you have to hold them right till expiration. The other problem with these are option strat can't figure that the market maker knows about these, and the implied volatility is going to change at different rates in each one. And I'm just trying to warn people, lots of times these ratio diagonals, and they look great on paper, and then you do them and you just, so, I mean, just with caution or whatever, but let's say, there's a good case for them. Let's say you're bullish on this company, but you want to get some premium for earnings. Okay. So you're going to sell this, you get 58 cents. You're going to buy this, it costs 99 cents. That's where your $40 risk comes from. That's fine. But then let's say you do get a little move tomorrow. Let's say by tomorrow the market opens, at 10 o'clock, this thing's trading at, I don't know, 40, 45, you get your move or whatever. You don't have to wait till the close. You could take off your short and just let this one, and then you have this one can go next, can just run. And you just leave this one on and try to play for an after earnings move. That's a strategy also. So, all right. So we pretty much covered the gamut on the different trades. I'm trying to get a bigger playbook because I know I'm like a broken record on those risk reversals, that 3-leg risk reversal. I just like everything about it because it earns a yield. You can take your wife to dinner or do whatever. In my case, I could buy Jack's dog food or whatever. But it gives you some immediate income. But it's like Alti in the sense that it has limited downside. It's like a collarized trade. It cuts off, it does it in a different manner. So you have limited downside, but you have unlimited upside, and you get to take. To me, that's the perfect trade. Now that doesn't mean it works out all the time, but I mean, that trade to me solves a lot of my problems. But like I always remind people, the stock still needs to cooperate after the earnings. It's just like you're going out hunting and you set a bunch of traps. Well, the bear still has to come by and get trapped in the trap or whatever you're trapping. I don't know what people trap. Anyway, but it's like setting solar panels on your roof. Okay, greatest thing ever, but wonder if it's cloudy for the next month. Your solar panels aren't going to work that well. It doesn't mean they aren't good ideas, and it doesn't mean it's not a sound strategy. That's That's what it's like doing a risk reversal on a stock that doesn't go up, or doing whatever. You have to have the stock's price to cooperate with you. All right, what's going on in the market? I'm bored of talking about earnings. Hopefully the market stabilizes here. It looks like the noon bar drove us down here, but then since then 1231 and 130 bar has been trading within the same range. We have single prints right here on the profile. We're right there with that. Anyway, whatever, single prints. But then we have, and then we also have single prints up here. So, but basically, I'm going to move this toward the single prints. Sorry. This area right here, if we get up there, there might be sellers there. Maybe not, but I'm saying it might be a place that you want to, because there were sellers there this morning, and there were supposed to be buyers there, but they weren't. It was they trapped all the overnight longs, but whatever. You guys get it. I know you guys get that kind of stuff. All right. Is there anything else I forgot to show this morning? I guess I just forgot to show the high yield technical analysis. You want to see how your favorite fund's doing. Let's go past the top 20. Let's just see what else we have. There's QDTE. That's a good one from Round Hill. 42%, catching a lot of NAV upside, and to make 20% last year. That one's hard to beat. I know I was a big proponent of triple QI, and I like what they're doing, but I mean, the performance just hasn't materialized quite like Round Hill has. And I'm sorry, I like triple QI. But anyway, be that as it may. I'm sorry about that. But also at the time there wasn't QDT. Remember when I liked triple QI, it was the only show in town on indexes that was making a huge yield. It just did it at the cost of NAV return. And that's a big reason why I wrote the max factor. We have to have language to be able to express what's going on to us. And these covered call funds, these high yield funds they trade different than other things. And there's old Wall Street tools don't work, but I think the max factor is pretty good. I think that you could make a case that QQQY is maybe the 26th best one out there. But if you're looking for an index-based one, you might want to look at KQQQ first, or you might want to look at QDTY from YieldMax, which is all, it's not just a J problem. I mean, lots of J stuff does well, but for whatever reason, that Defiance one just didn't really materialize like the way I suspected. And a lot of you guys tried to tell me that. And anyway, I appreciate it. All right. But so nowadays, the one that's just killing everything, well, KQQQ and T-SPY are just the beast. Here's WDTE. I just saw a comparison of somebody pulling up best performance for the last week or last month, and WDTE was actually leading the way. And it's just on a shorter time frame. It was beating a lot of them. There's old SDTY. I mean, we have so many choices. Here's Alti, my favorite one. Once again, I like what they're doing. It doesn't mean it always performs, but I like their strategy. But the reason they're only 38th is despite this high yield, they've only turned that into about 2% NAV return. But to be fair, they made 27% over the past year total return. So that's still pretty dang good. Now, that doesn't mean they'll make that much this year, but we'll just see, right? SPY-T, I like that one. I mean, but there's better choices out there. 21% yield, it's really 20, but 6%. I mean, mathematically, there's choices that have been better. Will, JPMO, SPY-I is one that people love. Once again, mathematically, SPY-T's been better. I mean, people love SPY-I, and I guess to be fair, SPY-I's been better on total return, but over this quarter, mathematically, SPY-T has been better. It's almost double the yield and made about the same total return. I mean, about the same NAV return, within a point on the NAV return, but it has like 80% more yield. Let me just see if there's any others that catch my eye down here. I always ought to say what Alti's doing because there's so many people that care about Alti and Misty. I probably ought to look at those automatically every morning. Misty was like second to last time I checked. Now it's moving up. It's third to last. I mean, it's hard to argue with 85% total return, but that was last year. Is it going to get it this year? Well, I don't know. Just this quarter, just the NAV is down 25%. Although when you're paying 156% yield, you can suffer some NAV issues and still have a decent total return. So the jury's still out on that, but that is definitely on the cold list. That has not been hot for a while now. Just for whatever reason, but there's tons of other good funds down here that a lot of people have liked, like Infly. What happened to Infly? Did they miss earnings? That used to be one of the best ones. I mean, it still has a 51% yield, but it's had little NAV return problems this year, but it made 60% last year. So nothing lasts forever. It looks like the Infly of this year is either PLTY or NVDY or one of these up here. All right, well, that's a pretty good review. I feel bad that I missed that this morning. Hey, Froggy, what's going on with you? How successful do you think they were with the hedges when we had all the dips? Who was? Ulti? ULTY? In the last dip, there was just like a two-day dip. Or, we made a new all-time high and then we trapped and went down to the lows. And then, 2 more days after that, they did really well from here to here. They were, and I'm just talking mainly about this day, the day they went from here to here, they were down 2%. LFGY was down about 5%, and Blocks was down 7%. They're all similar funds with similar underlines, but Alti is the only one that's using the collar strategy. And it really paid off for Alti. I made a video called "The Good and the Bad in the Alti," and because I really think some people are too optimistic about Alti and think that the puts will keep them from losing any money, that you just by listening to people talk on the internet. But they got to protect the puts. They got to protect the puts. This thing can't go down. But it needs a big, in other words, if this crash would have happened over, it's not a crash, but if this would have ground down over 3 days, I bet those puts wouldn't have kicked in, and I bet they would have been down about the same as LFGY or GPTY. What the puts do, though, is in a big move. It depends. What I'm saying is it depends on how big the move is, but they definitely did their job that time. Now in April, it was more of a grind down. It was pretty severe at the end, but let's just look at that really quick. Let's just try to answer Froggy's question here. I think I checked before, and they didn't help. They helped, but not as much as you might have thought. And it's just because they have to redo them every week. They're about 5 to 10% out of the money. If the stock drops less than 5 or 10%, Alti gets that entire loss. And it even hurts them a little bit because they paid a premium for the put. Now it came out of the call money. But they sacrificed some of their call money to get this put that's 10% out of the money. And if you have a stock that drops 9%, the put didn't kick in. And if it drops 9% the next week, the stock's still down 18% and that put spread never kicked in. But if it drops 20%, then it really helps. That's the whole reason I made that Alti video, is just to try to explain the way callers work, and they aren't magic. But anyway, all right. So let's look at Alti and let's compare it to LFGY. Very similar stocks. LFGY does, I always say you can do 2 things with options. So the first thing they do with options is they both earn an income. Alti earns an income, and the second thing they do is they buy a hedge. Well, LFGY earns an income, and then they buy an upside hedge, essentially, because they uncap some upside. But anyway, now let's look at this from January, or let's go just for the pullback. Let's look at like March to March of 25 to the low. I think it was either 8th or 9th. All right, let's see how they worked. I mean, this is an example of puts not be magic. LFGY owns 0 puts. Now, they don't have the exact same stocks. It's possible, and it's probably probable that Alti stocks were more risky. So if you look on a risk-adjusted basis, yeah, I'm not saying the puts didn't help, but, they're right together. Now let's just compare Alti to the SPY. Okay, that's a win because it tied the SPY, and they definitely have higher beta stocks than the SPY. Their average beta is like 2.5 or something. So that's a win. You may not be able to see it because it, tied the SPY. So yeah, they work. They just aren't magic. But I would have really expected them, if the puts were really magic or really worked really good, they should have been down less than YMAX, or less than LFGY or something. And they really weren't. It just about tied, because YMAX has some high beta stocks also. Anyway, they did a good job of protecting capital. But now let's check. So the other side of the equation is they Alti ought to do worse on the way up than a YMAX or than a LFGY. I actually don't know if they did, but in theory, because the Alti, like I say, you can only do two things, and they sell premium and hedge the downside. Well, these other things sell premium and hedge the upside, essentially. Or they buy extra upside. Okay, so that does not make a good example for what I'm talking about. But Alti's just doing well. And so the other thing is, I'm also talking about passively managed. I'm not factoring in that the guys in Alti, they know they're fully capped, so they'll roll aggressively and they'll try to keep it progressively uncapped. So anyway, Alti and one other you think you added. Oh, yes. Okay, Alti has one on now. They have a UVIX position on. I don't think it's a full-time hedge. Now, GPTY has a full-time hedge, and actually LFGY has a hedge also, and I forgot about that. But it's okay. When I say you can only do two things with options, I mean on each position. So Alti has, on each position, they have each position hedge. LFGY doesn't have each position hedge. They do cover call spreads, but they kind of are doing three things, because let's go to the crypto trinity, because they do have a hedge, but it's really far out of the money. I think it's more just for like worst case scenario. But yeah, I forgot to mention that. And it's called this one right here, MBTX. And what they're doing is they're buying the 230 put and they're selling the 150, otherwise known as a put spread. I can't really get quotes on this MBT. Let me look at MBTX. So, but this plays a part also. I mean, yeah, they do. But now when I say Alti, they just have as one of their positions happens to be a long volatility position. But that also worked as a hedge, and that really did help them Alti out in this last pullback. MBTX, this is like the micro Bitcoin index or something. So let's see, look at all. Yeah, CBOE. So it's like the SPX, but it's like the XSP, which is the micro or the mini SPX. This is the mini Bitcoin. I forget what the numbers were, 230 or something. Let's go back to Crypto Trinity. Yeah, or 250. Yeah, 230, 150. Okay. I can't chart it in option strat. That's the option strat doesn't have that in it. And we can just look at it here. So for this week, the protection kicks in down here. That's what I mean by when I say it's, for emergent, more for just a panic sell-off or something, which can darn sure happen in Bitcoin. Wonder if, I don't want to, I could think of a bunch of crazy scenarios, but that's well below the current price. And they do that every week. The other thing is they're setting it way down there so they don't have to, because the further they set it away, the less money it costs them. Let's get this on a daily chart and see. Sometimes it's hard to tell on the 30-minute chart, but yeah, it's protection, but they're going to wear that whole decline all the way down to there. So, but if for some reason Bitcoin went and made a new low, or something, took out the April low, you'd be glad you had this. So yeah, good point, Froggy. Good point, Froggy. All right, guys. Well, there's no other questions. I'm going to get out of here. It's 2:08. I'm not sure if I'm going to do an end of the day live stream. I've already pretty much covered everything I want to cover. But not that I couldn't do one. I'm just going to probably call this the end of the day live stream. I don't know if you guys want to see one, put it in Discord. But I've already talked to everyone. Marcus here. Marcus is here. I hope SB is watching this wherever he's at. But also maybe people that are doing their earnings trades right now will go back and look at what I did or something, go back and watch the recording. But I'm going to get out of here. I've had a heck of a day. I had an appointment that ran over just a little while ago, and I have a bunch of stuff to do. So I'm going to let you guys go. And like I say, this is probably going to count for the afternoon report, if that's all right with you guys. All right, guys. Well, I certainly appreciate it. And I will talk. Don't forget to hit the like and subscribe button if you haven't already. Dan usually reminds me to do that, and he must be busy. He's a working guy, so he's probably off helping a client. All right, guys. Well, I appreciate y'all, and you have a wonderful afternoon. I'll talk to you later.